Here are the 5 most important things I have on my checklist when I'm looking for stock and option trading opportunities. As I do in all my videos, I'm going to use my real life positions, my real life trades, and real life stocks that I was actually considering this week. The first thing I'm looking for is just some kind of volatility. I prefer it if I have a nice stable stock that has recently had a big price decline, but is also finding support. That's the kind of volatility I like the best. Another type of volatility, which I also trade, is just underlying stocks that have volatility. Here you see a nice example of that. It's FSLR. This is a stock that can really move around a lot. As a result, it generally tends to have really nice premiums. So volatility is the first thing I'm hoping I can get in a trade. And that's especially the case if I'm trading options. The next thing I consider is price. I don't like trading in penny stocks. I like proven companies. And as a result, those companies tend to have a little bit higher price than some of these penny stocks. Here you see I've sorted my list of almost 200 stocks and ETFs that I'm willing to trade in. And notice that the lowest price stock is actually MPW. It closed down on Friday at $5.15 per share. So I prefer the companies I'm trading in for the stock price to be at least $5 per share. And if I scroll down here to the very middle of my stock trading list, you see the middle is right around $92 per share. And of course, if I was only trading in a smaller account, then I would lean more towards those lower price stocks. But $5 is my minimum price. The third item on my checklist is that I must be willing to take ownership of these stocks if the put options I've sold are assigned to me. In other words, they have to be companies I'm comfortable owning for the long term. And the only way I'm willing to own a company for the long term, if it's a fundamentally sound company that's proven it can be profitable in many different types of market environments. The fourth thing I'm looking for is for there to be some nice strong support, preferably above or at least around the strike price of the put option I'm selling. Now I would like that to be the case on multiple different time frames. So when I'm picking my strike price, I want to be able to pick a strike price that's below or at worst at support. And for that strike price put option, I want to get sufficient premium. My goal is to make around a 15 to 25% annualized return in my option trading account. A question I get asked is, Randy, you just sold a put option in a stock and the return is less than 15% annualized. Why did you do that? And a couple of reasons are, number one, I still get nice interest on my cash. So this time I'm getting around a 4 to 4.5% interest on the cash I have set aside for the put options I've sold. But the other reason, and probably the main reason, is that I also have the ability to close positions out early. And if I do that, I can improve my return. For example, let's say I sold a put option in a position and it's only paying around an 8% annualized return. And let's say, for example, that trade's a 30-day trade. If I can close it out on day 15, then I've just doubled my return. Now I've reached my goal of a 15% annualized return, and I'm not even considering the 4.5% interest on the cash I have sitting in my account for that position. And the fifth thing I'm very concerned with is when is that company's next earning date. If I'm trading a shorter dated option, I prefer to not be in that position through earnings. So if you want to screenshot it, here's the checklist that I just went through. These are the main things I'm looking for. I keep track of my potential trade opportunities in a watch list that I keep on Google Sheets. So on this list, I have all the ticker symbols that are interesting to me at the moment. That kind of narrows it down from that big list of 187 down to about 30 or 40. Then I color code it to kind of narrow the list down, because on a busy day, I don't be looking through 30 or 40 ticker symbols. So my color coding is as follows. If it's kind of a light green color that's not real bright like that one, this one is pretty close to an opportunity I want to take advantage of. Now, if it's a light green one, that's something I'm really looking to do that day. And a light green one might be one I'm looking to do that day if the technicals and everything else line up in my favor. Now, a yellowish color one, which we see one here, we see two of them here. Those are the ones I'm looking for an opportunity, but they're not quite there yet. They're almost there, but not quite. Maybe they're experiencing a decline, and I want to see that decline level off and begin to stabilize before I take a position. So that's how I keep track of my potential opportunities. And then several times a week, I go through my entire list of 180 some stocks and add or take away from this list here. So what am I looking for on the companies I'm selling a put option in today? Which today is Sunday, so I actually wouldn't be selling them today, but let's just say tomorrow. Well, I prefer the stock to be having a down day. Now that is not a hard and fast rule for me, but it is preferential because you probably get more premium for selling that put option. So if it's a down day, I lean a little more towards selling a put option in that company if everything else looks good. I also want there to be decent volume on the options I'm trading in. Now I will trade in some very low open interest options if I feel comfortable with them being assigned to me if I can't adjust them. I know some traders, they say, well, I gotta have at least 200 open interest in the option. I'm not that way. I'm willing to trade lower open interest options if I can get a good feel and I'm comfortable with the position being assigned to me if I can't roll it out because of that low open interest. Another thing I'm looking for when I'm looking to trade options in a stock is I don't want a meme stock. I'm looking for a normal stock that's going through normal market movements. And the reason is I want some amount of predictability in a stock that I'm selling someone else insurance in. Because when I'm selling a put option, I'm selling somebody insurance. So I want some amount of predictability. I know anything can happen on any given day, but a meme stock, those tend to be extremely volatile. So I typically will not trade in those. But what I do like is a company that maybe was overvalued and now has come back down and it's more fairly or undervalued. So it's experienced some decline and possibly trading at lower levels than it normally does. Now those are ones that I do like to trade put options in. But besides meme stocks, there's another type of stock that I just do not want to trade options in, at least not at that moment. And it looks like this stock here. Now this is a company I really like. It's Flowers, ticker symbol FLO. But notice that on every time frame, the hourly time frame up here, the daily time frame down here, and the weekly time frame down here, on every time frame, it's experiencing consistent, steady declines. That's not what I want. I don't really want to catch a falling knife. Unless I just really want to own it at some price, I'm going to wait till this one calms down. And I am watching Flowers. I'm waiting for it to calm down. So I'm doing that with this line right here that just brightened up for you. So I'm watching for it to break this downtrend. And it coincides with this line here as well as that one right there. So definitely not a stock I trade a put option in it because on every time frame, it's showing weakness. It's declining. All right, so I have my watch list. And this was the watch list I had up until Thursday. So I haven't updated from over the weekend. And actually, by the time you watch this video, it's probably going to be a week or two farther out. But this is my watch list. So now we're going to go through this watch list. I'm actually going to show you 5 stocks that I had that I would have traded in last week. We're going to talk through the trades, and I actually did a trade on one of them. So I'm going to show you what that was. Here we have the stock I was sharing with you a little while ago, and it's First Solar, ticker symbol FSLR. It's a very volatile company. I forgot what the beta is, but it's well over 1. It's a very volatile company. So because of that, there's nice premiums. And the first thing I'm looking for is earnings. When will it be announcing earnings? Because on a shorter term trade, I really want to try to avoid earnings. It's saying that earnings are around November 4th. I don't think that's been confirmed yet. So a little less than 2 months out. So I'm good on earnings if I wanted to trade in First Solar. The hourly chart here in the top right, it looks pretty good. It's kind of trading in a range which is unusual for First Solar because it tends to go in one direction or the other. One thing I'm noticing here is struggling to break through this 210 area, but it is finding nice support right around this 197 area. So this is actually a company I would be willing to trade in. And I might have placed a trade in this last week, but I already have a put option I sold several weeks back in it, so I wasn't looking to add to that position. But overall, it's not looking super strong because notice on this daily chart that I made a nice new higher high here, came down, retested support. That's all still looking good, still looking bullish. But then when it came back up, it can push through this area of previous resistance. In fact, it didn't even get that high. So that's saying that the stock is looking a little bit weak. But again, it's one I would sell a put option in, but if I sold one now, I'd sell it farther out of the money. Here's another one I was considering. It's CB Chubb Corp. So again, hourly chart looks good. It's not in a bearish trend, so that looks pretty good. Our daily chart, it also looks pretty good. But one thing I didn't like about it is that although we have support right around here, around $270, I like to have multiple layers of support between me and the stock price. So I felt comfortable selling a put option down here around 260, but there just wasn't enough premium to make it worth my while. So because of that, I passed on Chubb for last week. Here's another one I've traded in recently, but I don't have a position in it right now. So I was considering doing a position last week, and it's CSL Carlisle. Now notice that the hourly chart, it doesn't look great, and that's the main reason why I didn't do this trade. Notice that it broke down. It was finding support right here around 373, but it broke down right in here. So that's definitely not what I want to trade in right now, but I am watching it because if it found nice support, I would be willing to sell a put option in it. Now another reason is that I like to sell a put option not up here because notice that it's breaking that support that I found right in here, but I would like to sell it down here at worst. But the other problem I have with CSL is that it's kind of expensive right now. If I zoom out here on this weekly chart, you'll see my notes here. My estimation is that its fair value is on the high side around 360 and the low side around 300. So if I'm going to sell a put option against CSL, I really want it to be somewhere in that range, 300 to 360. I don't want to be selling it way up here around 350. So because of that, I need to be able to get enough premium by selling it down here around that $300 price in order to make it worth my while. And that's what I've done in the past. I've sold longer dated options like 3, 6, or 9 month options against CSL, got nice premium, pocket that premium and close the position out early. So I'm looking to do that again with CSL. Now I will tell you that if it comes back down here in this area, around this 350 area, at that point, I'll probably go ahead and sell a longer term put option if everything still looks good. Now let's move on to the actual company I did a cash put option trade in, and that's Verizon. Verizon is a company I've made a lot of trades on over the past few years. I've made a lot of money on Verizon. Although it's not some high growth company, I've done really well selling options in it. So one little negative here, if I look at this hourly chart, it does look a little bit bearish, because notice we have our highs back in here, and notice they kind of drifted sideways, but then they kind of went down here on Friday. I actually did my trades, I'll show you in just a minute, back in here. But on the downside, on the support side, it's finding good support around 43. So the hourly chart looks pretty good. Now let's switch over to our daily chart. And now our daily chart, it actually looks to me even better than our hourly chart. We have a nice new higher high right in here, and it appears to be trying to form a higher low right in here based on the low back in here, or about the same low as back in here. It's also riding this red 200 moving average on this daily chart. So that looks good. If I was willing to go a little bit riskier, I'd be willing to sell a put option right around 43. But I gave myself a little bit of room to be wrong and still win, and I sold the 42 put option, as you'll see in just a minute. Now, if I want to be even safer, because notice what happened back in here, that decline below that $42 area, if I wanted to be even safer and I was willing to make less premium, then I like to sell the $41 or even $40 cash secure put option. Now let's look at our weekly charts. I like to check multiple time frames when I'm selling put options. And our weekly chart looks about the same. It's been finding resistance around 46 and general support right here around this $40 area, $41 area. So again, our $42 strike price would be in the money, but came back down and tested this area that's actually tested twice over the past several months. And actually, if you look back here to February and before February, for several months in December and January, parts of February, it was actually below that support area, which is around 40. So in the back of my mind, I'm thinking, am I comfortable owning Verizon at 42? And the answer is yes, I am comfortable. And the reason I wanted to own it at 42 is that if it comes down, it's probably gonna come down here around this $41 area. And if that fails, it's probably going to 39. Any of those are prices I'm comfortable dealing with Verizon at. The other thing is, I didn't take a full position side in Verizon yet. I'm going to build it over time. So although I did sell some put options at 42, I don't have a maxed out position size yet. And here you see the actual trade I did in Verizon. Now I did this trade 3 days ago back on the 11th, and I'm filming this on the 14th. What I did is I sold the Verizon October 17th, 42 puts and got 45 cents per share. And the goal of this position is to close it out early. I'm not going to hang out in this position when it's down to 4 cents per share. I'm going to close it out early. So although we started out with a less than 15% annualized return, I'm looking to improve that return to get it up hopefully above 15%. Here's a couple tips I want to make sure that you have on your checklist, because they're on mine. Before you place any trade, you always want to consider your risk. So for me, it's always risk first, and then how much premium can I possibly get. But always consider your risk first. The next thing is, before you do any trade, check every angle. And for me, it involves checking multiple time frames, as you saw when I talked through each one of those ticker symbols. You just want to make sure the charts look good. Make sure there's support at, or even better, above the strike price of the put option you're selling. And then finally, ask yourself, if the stock were to drop 25% right after I do this trade, am I still okay? No, we won't like it, but are we still okay with the position? If you answer no to that, then I wouldn't do the trade. You have to be comfortable with the companies you're selling put options in. You don't need 40 trades to have a good month, but you do need multiple really good trades. And they need to be well thought out, and ones where the odds of you winning are in your favor. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a Patreon down at the link in the description below. Entries, or when you're selling options, that's very important. But knowing when to exit, how to manage your trades, that to me is even more important. If you'd like to see when is the right time to close your put option positions, check out the video at the link above and in the description below entitled Why You Should Close Short Options Early. Until next time, happy investing, and we'll see you again soon.